Hello for the 54th Berlin Real Estate Talk. Today we're going to talk about taxes, and today our guest is Mr. Volker Mauch. Volker, great to have you here today.
Thank you very much for having me.
Volker and me know each other for quite a while.
Yes.
We are both paying taxes in Germany,
We are.
sometimes, sometimes not. And so for all of you guys who actually own a property in Germany and who need a lawyer and a tax expert and maybe who are looking to buy a property, this is the right webinar to be on. And for the people of, for all of you guys who are watching it for the first time, we can't see you, we can't hear you. My colleague Nick is moderating that little webinar. It's the 54th Berlin Real Estate. So Volker and me have done quite a few before. I think it's the third.
Yeah, I think it's the third time.
The third one. And he was one of our first guests back when we started many, many years ago. And so please, if you have any questions regarding what we're talking about today, buying property, selling property, taxes, all these kind of things, you usually need a lawyer who explains you what's going on. And Volker is a lawyer in Berlin now for how many years? You're property lawyer?
25 years.
25 years.
Yeah, 25 years last year, so 26 now.
Wow, congratulations. And we are still here. I'm doing it for 17 years, Volker now for 25 years, 26 years. So it looks like we know what we're doing. Otherwise, you wouldn't do the job anymore. And please feel free if you have any questions. We have a lot of questions from you guys beforehand in this little webinar. Taxes is always something everyone doesn't want to talk about because it's not really interesting, but it's very important when it comes to the investment scenario. It is very important you're aware of taxes, what kind of taxes we have in Germany, and so that's why we have that webinar. So again, if you have questions, please feel free to ask these questions in this webinar by just typing your questions into the chat. My colleague Nick, he will give that to us, and then we're going to answer to your question. The first session will be around 20 to 30 minutes, where we go through your questions. We go a little bit through buying and selling in Germany. How is the legal process? When do you have the first enjoyable period you need to pay taxes? And what you need to do as a property investor or owner. Volker, 25 years, now it's entering the 26th. I didn't know that you started so early when you were so young, Volker. I wasn't aware of that.
Right, you were still having fun. I was already working.
Okay, cool. Volker, you're working in a law firm called VPMK,
Yeah.
which is quite well known in the industry.
Yeah, we're kind of special in our focus on international private clients. So we have a big part of the firm is working with residence and work permits, and another portion is working with in investments. And so I'm obviously from the investment side, mostly real estate investments in German properties, and also a little bit like company setups and stuff like that. But our focus is international private clients, which I think have quite specific needs.
Yeah, and you are quite a big team, no? You have built up quite a big team.
Well, I think for a German firm, we're mid-size, but because we're so specialized, it's we're still kind of unique in that setup. So we're 10 attorneys, and we are a total of, I think, 22 employees right now.
Okay.
So so it's comparatively big team because we have people very long, and they support very much in the consultations, also to cover the different languages. So we have the Chinese, and we have Russian, and we have English, Spanish, French, all these. Okay. Yeah. So that makes the team a bit bigger than usual also.
It makes the team bigger than usual also mean that you are talking to a lot of international people who own real estate in Germany already?
Yeah, I mean, a lot of the clients we have helped to acquire the real estate, and we also have some who come from other sides of the firm, but most of them we supported them when they bought the properties.
Okay, okay. So what kind of service do you offer for someone watching you today and is maybe looking to buy a German property?
Well, when they're looking to buy the properties, then we offer kind of a 360-degree service for them to support them in the acquisition, to make sure it's safe, to make it convenient for them. So basically, what we need from them is to read our emails, and we need a power of attorney that we will help them to produce, because Germany is very formal. It needs a certain form as well. but they don't have to come to Germany and afterwards for the signing. They don't have to come here to show their face to the bank. So we help them with all these other procedural steps. And of course, most of our clients buy off plan. So the payments are made in stages. The whole process of the building is something that where we represent them and accompany them with what they need. So it can be quite a confusing process for someone who's buying the first time in Germany. And we try to keep the confusion and the irritation as small as possible.
Okay. So once we have bought a property, let's say I'm a client coming to Germany looking to purchase a property. I don't speak German. I've spoken to a real estate agent or a developer. I've secured the property. I call you and say, hey, Volker, can you please purchase a property? Make sure that all the checks are there. You make all the legal checks. If the developer is fine, if you buy an existing property, all the papers are there, right? So you do all the legal checkups?
Exactly. We do we produce a whole legal due diligence. We answer all the questions.
Yeah.
And at the same time, you probably you want to use the financing you want to leverage the investment. So we will support you with the financing. We're not going to kind of search for financing. That's something for more specialized finance brokers usually.
Yeah.
But they will need documentation and all that. And so we will support with that process as well.
Okay.
And once everything is clear, then we make the notary appointment and we'll go there and after you approve, sign the purchase contract on your behalf.
Okay.
And then for the existing ones, it's about half a year to 9 months of implementation until really everything is done in the land register and so forth. For off plan, it's quite a bit longer. It usually it's like 1.5 years of building period, and then a little bit more for the legal implementation.
Okay, perfect. So when is a client usually enjoying the first tax bill when you purchase a property?
Well, I mean, he won't enjoy a tax bill at all. They will write to him and say, please declare your taxes.
Yeah.
So unless you really ignore that for a very long time, you won't enjoy a tax bill. If you ignore it very long, you'll enjoy a tax bill that's quite hefty.
Yes.
Because then they will estimate you. You're supposed to hand in the first tax declaration. We usually do it when the first income is there. Yeah. So when they have had rental income, then for that year, our clients usually prepare we prepare for our clients the first tax declaration. Yeah, and that is usually about 15 months later at the latest.
Okay.
The deadlines have been a bit changed during COVID times, but now they're going back to the old terms. So right now, there's the tax declarations for 2022, which are being finished. This is because they have us as representatives. Yeah, if you do it by yourself, you have to hand it in a bit earlier.
Okay.
Yeah. And so this is the first time they have to do it. If you don't do it, it probably will take a bit longer until they come back to you, but you will have to pay interest and a fine. And if they really go for you with investigations for tax embezzlement, so to say, then the fine will be quite hefty. So we recommend to not let it go beyond the term.
So, but basically what you're saying is if I buy a personal real estate on my own name in Germany, I'm not based in Germany, I still have to pay income tax on the rental income in Germany.
Yeah.
And I do even if the income is less than maybe the interest, or even if there's no profit.
You have to declare certain expenses.
Yeah.
Yeah, for them to be considered.
Yeah.
Also, you often have some choices. We'll come to that later as well. And that's why you even have to make it if you have a negative income, so to say, tax-wise.
Yeah.
Of course, if you have no income at all, you don't have to declare them. Yeah.
Okay, but let's say, we are talking about buy-to-let investors, as we say, or property real estate investors who are buying property to rent out and have rental income.
Yeah.
We only talk about this group of people, not talking about people buying an apartment and using it themselves, right?
No. They have a completely different situation. So we're really talking about the classic investor in real estate in Germany. Yeah, they have a limited, if they don't live in Germany and they don't have a residence in Germany, then they are limited taxable. And that means their German income is taxable. So the rental income is taxable in Germany.
So now we have people calling us, and this is also part of the question which we're going to cover later on. Achim, 42% taxes in Germany. How come? I'm just owning a little apartment. Maybe you can put some light into that.
I know that number is quite shocking. I remember I was in Singapore once in a taxi and I talked about Germany, and the first thing the taxi driver said, "Oh my God, the taxes are so high." Yeah. Oh my God, when the Singaporean taxi drivers know, then actually this is quite a problem. But I think the reputation is much worse than the reality when it comes to that, because the 42% are the top tax for higher incomes. I mean, for people who live here, it may not seem such a high income when you start paying that, but for rental income, it is actually quite high. So we have a progressive tax rate, meaning it starts at 14% and then goes up to 42%. And 14% doesn't sound so little either now for most people, but there are a couple of deductions which I think are quite competitive compared to other countries that are made before you apply the tax rate. So the 14% are only taxed on a smaller tax base, on a smaller amount that is actually the taxable profit. For example, you have a certain income, and then from the income, you have a rental income. From that, you deduct the interest for your mortgage, which I think is not so uncommon, but yeah. And then you have the depreciation, which is also kind of an interesting topic today because there have been a few changes. But until recently, the depreciation was 3% or 2% if the building was a bit older, which means 2% of the building value could be taken off from your rental income every year before you come to the profit.
Yeah, just a quick one, because I think that's different in the States and in the UK tax-wise. So in Germany, we talk about the value of the building, and the land is not being depreciated. This is a big one. Yeah. Maybe you want to explain that little difference a little bit, because there's a lot of confusion out there.
Yeah, well, the difference, I'm not so familiar with the American and the English system at that point. Yeah. I think the depreciation there is in general a smaller topic. Yes. But in Germany you have it, so you take the purchase price and then you deduct basically the value of the plot. Of course, if you have an apartment, this has to just a proportion of the value of the plot in relation to the value of the building. It's a very nice formula that's somewhat not so totally self-explaining. But then you come to an amount which is usually, I would say, around about 75 to 80% of the investment that is actually the building value, and that you depreciate, that you write off. So to say, usually over, initially it was over 50 years, then they made it more attractive to write it off with 3% per year. And so now there have come a few additional possibilities to write it off.
Cool.
So meaning reducing your taxable profit.
And now we have that great question, because I got a couple of calls. 48% tax reduction, Volker. This is my favorite word. I know we are here in marketing and real estate. This is our job, of course. And Volker hates me for asking that question. So how do I save 48% of my taxes in Germany? Tell me, Volker.
Well, actually, you can save. I mean, if you really are the investor of real estate, you can save much more than 48% taxes, because this is not. I think what it means, it's not my claim.
There you go. I'm just giving you my claim and he has to fix it.
I think what it means is that you can get a tax reduction in the value of 48% of your investment.
There you go.
Yeah. So basically, unless
that's why you're the lawyer, I'm the real estate agent. You know, that's how
unless you have earned more than 48% of what you initially invested, you don't have to pay taxes. That's, I think, the claim. I think the reality is can be pretty close. There are a couple of additional conditions. There are basically two changes in the already, I think, quite positive tax situation before. So before we had a situation where you could write off 3%. Yeah. So just take 3% of the building value. I said before 75%. So we say 2.2% of the total investment as depreciation for the standard. Yeah. In addition, you have a mortgage, yeah, which now, thankfully, the mortgage rates, the interest rates are so high. No, but because the interest rates are so high, you can expect about another 2.8% or something of interest. So you can basically get a 5 to 5.5% yield, tax-free only by the normal depreciation and the interest, yeah?
Okay, maybe you
If you
just
do that.
repeat that one because this is very important. When we do the
Okay.
investment analysis, Volker just said a big one, right? So how much is the depreciation looking from the tax perspective, not from the rental income side, right?
Depreciation is, right, from the tax perspective,
Yeah.
is around about 2.2% of your investment every year. Yeah, it depends a bit on the building value.
Yeah.
Yeah, but that's basically the main deciding factor.
Okay.
And then for the mortgage, of course, it depends on the mortgage rate and depends on the amount you borrow.
Yeah.
But let's say if you have also there you have a mortgage for say 70%, yeah, and you have a 3.9 or something interest rate, which I think is more or less the normal rate right now.
Yeah.
So you take 0.7 times 3.9, and you end up somewhere around 3%, I would say.
Yeah.
This as much as a lawyer can calculate.
Yeah.
So you end up 2.2 plus 3, it's 5.2%, and this is basically the yield you have to make before you come into the taxable area.
Fantastic. Yeah? So a big one here. A lot of people asking me, Achim, I want to save taxes. That's why I set up a German company. I want to buy one apartment. Yeah. And I always say no. I always say no because this, what you're talking about, are personal income taxes, right? So please be aware of this is personal income tax, you as a person. And the great stuff in Germany is it doesn't matter where you're from. So tax-wise, everyone is being considered as a human person buying a piece of real estate, plot of land, including an apartment or a house. Now we have the German income tax, and I think this is something you would like to refer on, but this just be aware of. So everyone has the same tax regime here.
Exactly. It's the same tax is basically like for Germans, only that it's limited on this specific tax that for income that you make here. But I think because you mentioned the company setup as an alternative, I think why this sounds attractive because the companies have a flat rate tax. And so for many that sounds attractive, say flat rate 15 point something, as opposed to 14 to 42. But there's a big tax advantage in the end for private investors, is that for properties that are being held for more than 10 years, that are basically not being bought as a trader, but really as a private investor to gain rental income and all that, they can sell them after these 10 years without having to pay any taxes at all, on the profit. So you can sell them basically for for any price, and you will not pay taxes on the profit. That is different if they set up a company. There they will pay the taxes, and then also this whole depreciation model doesn't make so much sense anymore. Yeah.
Okay, so that's for you guys. If please ask Volker any questions, you can contact him on his website at VPMK.
Yeah.
And please just wanting that you are aware of it. Try not to optimize all your tax situations in order to buy the first apartment. So just start small, buy your first apartment in your own name. It's also easier to get a mortgage, by the way, which is another topic. And tax-wise, you have certain advantages as a private investor. And this is the webinar today is exactly about that topic here, right?
Yeah, there are situations where the company makes sense, but for most of the private investor, it does not make much sense. Yeah.
Okay. Yeah. Cool. So we have now covered
48%.
Yes,
right?
we're still missing the 48.
So what I said just now,
the
2.2. Yeah, if you add that up over a period, I mean, you said 48%, you didn't say what time, right? So if you add that up for 10 years, you just come to 22%, right? If you want to pull out after 10 years. So let's say what's new now? So that basically two new regulations that allow you to increase the depreciation. Yeah. So one is that instead of this 2.2 or 3% on the building value linear, you have a digressive depreciation. Yeah, that means for 6 years you can write off 5%. of the building of the building value again, with a little extra complication for calculating. It's always 5% of what was left from the year before. So in the first year it's 5%, in the second year it's 5% of 95, in the third year it's 5% of whatever's left from the 95 minus 5%. So it's that's why it's called aggressive, yeah, because it's slowly getting smaller, and that for the 6 years, and then after 6 years to switch to the linear depreciation again, yeah. If you calculate that, which I won't do now, but I've done it before, you still don't really reach to 48%. But if you have an especially energy efficient building for a not too high purchase price, then you can get an additional depreciation of 5% for up to 4 years. Yeah, so then that's really quite interesting, and that's how you get to the 48%. Again, this is a nice claim, it's a nice number, and you probably get somewhere around that, but the exact number is probably not going to be 48%. It's going to be some fraction or a little bit more, a little bit less than the 40.
So what's important with that number is that because a lot of people, like you just said, the person you've met in Singapore, the taxi driver, everyone thinks Germany has high taxes, and actually if you look into the detail and the reality, that's why this number is at 48. So there's a lot of opportunities for you guys to write off the investment tax-wise in Germany. And it's like a little company, right? You buy an apartment, you have rental income, but you also have costs. You have interest, you have legal fees, you have estate agency fees. You might want to buy a kitchen, which is again a different scenario. If you buy furniture, you have to pay the letting agent. There are a lot of little costs you can write off before you actually have to declare the profit. However, you do have to do a tax return, which is important. I know a lot of people who don't do tax returns, and then they call me after a couple of years and oh, I got a letter from someone, looks like that's the government, and they want to know what did I do with my rental income, right? Yeah. So you have to hand in that tax return in Germany.
Yeah, usually they come sooner or later, and then you have quite some additional expenses because of that. Yeah. And they usually at the latest they come when you want to sell it.
Oh yeah, that's also very interesting when you want to sell it.
Yeah. They have a quite good way and quite efficient way in Germany of seizing the purchase price. So the purchase price is just never reaching you because they first put their hand on it and say, first now you declare and pay all your taxes, and then you can get it.
Maybe that's for everyone watching today. Volker and me have had that a couple of times together. Then when I've sold the property as an agent, and then the seller was very happy because there was a big, nice little profit. And then the government, the taxman, as we say, the tax authority stepped in and they sized a certain percentage of the property price, and the buyer got a letter from the government, from the tax authorities. Dear buyer, please transfer this amount to the seller, this amount maybe to the remaining lender, the deposit, the bank, and the rest please transfer to our tax accounts. And to get then the money from the tax
then you have to put in your declarations. Yes. Then you have to put in the declarations.
Plus pay the penalty.
Yep, that's done, Okay.
So the notary, when you sell or buy, the notary always sends the documents to the German tax authority, so they always see what's going on, of course. Yeah. Volker, I think this is very important. So what's basically new? I think one of the topics today of this session is what's new compared to last year. I think we have some new stuff. Do you want to share that tax-wise?
Well, these are the two, what brings it to the 14%. So these two additional depreciations. So this digressive depreciation, which I said before, the 6 times 5, and then the linear additional depreciation if you have one of these energy efficient lower cost buildings. They are not that easy to find. You won't find it in Berlin, I think. It's pretty impossible.
Too expensive,
It's 5,200, I think, is the maximum amount per square meter. So I don't think you'll find that energy efficient building, apartment for that price. But outside of Berlin, you probably can. And then that makes it very interesting. Just keep in mind, 48% is what you can write off from your profit after everything else. So you have to make the profit first. I mean, it's like after you have to pay your interest for the bank, after you had all the expenses, and then the 48%, you might not even need that additional. Probably you don't need that additional depreciation.
Maybe just by an experience of let's say if I buy one apartment for 300,000 euros, realistically I get around 3 to 4% yield. Just ballpark figure. So we're talking about let's call it 10,000, 12,000 euros every year rental income. And then we deduct a few costs. I have maybe.
If you stay with a 3 to 4% yield, it's actually quite easy to calculate. But I said before, 2.2 for the depreciation and the 3% for the interest, then you have already 5.2. Yeah. This is the first year. So after a while, it changes a bit the calculation because your interest portion of the mortgage payments becomes lower. So that's why I think these changes now are mostly interesting for two groups. One is people who have already property here and talking about for investors who already have some and don't have enough expenses anymore, so to say, to have more amounts they can write off. And the other one is for investors who don't use mortgages. Yeah, we have some private families that invest quite high amounts and that don't want mortgages, and so they would basically the only thing they can write off or could write off was the depreciation, like 2.2% before, even less when the building was older. So that the yield is usually quite a bit above that. So then it gets a bit, for them it's very attractive to have this additional.
So when you do usually our clients are investing for a period of 10 years or more.
Well, minimum 10 years because of the.
And then at the end of the 10-year time period, usually there are some certain taxes to be paid because you already have used some depreciation.
That is actually good. If they reach their taxable amounts towards the end, it's actually also quite good because you don't want to give the impression that you are buying to sell. This tax exemption for selling tax-free after 10 years is for people who purchase because they want to generate income from rent and not people who want to generate income from trading. So it's actually quite good if you reach that taxable, but you shouldn't touch it too much. I think that's important.
Excellent. This is new stuff. Nick, if there are questions now from the things we just discussed, there must be quite a few, no?
We got some, definitely.
You got some? Okay.
I think we could start. You mentioned the energy efficiency requirements for a building to have the additional depreciation.
Yeah, KfW 40. That's the energy efficiency thing. I believe that's the only one for the energy efficiency.
What are the other requirements to have these additional?
There's a requirement about when the start of the building has been when the builder has notified about the start of the building, of the construction, and there's also an end time. I think the start of the building must not be before October 1st, 2023. And the end time is some point in 2029. I don't have the dates top of my head, but this is the one thing. I think the main issue is really the KfW 40 and the maximum amount that per square meter that the building must not exceed. The price. Because that makes the corridor quite small, because KfW 40 is somewhat expensive to build. And at the same time, the building must not cost more than 5,200 per square meter. And then at the same time, that reduces the buildings. But the idea is that they want to subsidize energy efficient, affordable real estate for living. It's also for living. That's the other one. You can't do it for office spaces, for example. You can't get that additional depreciation. Other than that, I don't think there is another one. But
okay. And we have several questions.
Yeah.
So
I always recommend actually before you now go and buy a property to properly get that checked and not just say, now, okay, here, where do I have to sign? Yeah.
Okay, just the small one. Will the depreciation also be calculated in the site cost?
The depreciation is also calculated on the site cost,
Okay.
Yeah. But so they take all the costs and then you calculate the building portion and the plot portion. Yeah. And for this extra depreciation, this 5%, it's up to 4,000 euros that you can write that off. Yeah. So it's another little limitation there per square meter.
Okay. Then we have the longer one, which was the first one, which just came in as soon as you started talking. I need to explain a bit more. Let us say I buy a self-use property but don't move in and live there by myself, rather than rent it out to a tenant due to changes in personal situation. Assume I have no special subsidies like KfW, etc. from the bank. Should I care to inform the bank if the bank comes to an inspection and meets my tenants? Can this be an issue? What can the bank do if they are not happy?
The bank, I don't know, that's a bank question. I'm sorry, I don't think I can really answer that. But if you move into your place, then we're also pretty much out of the topic of this, because then you are actually, if you move in there, you are unlimited taxable in Germany. But this question is really more relating to the bank, and I think it depends very much on your bank and your agreement with the bank, what they will think of that.
Okay, and another one, say the property I'm interested in is 500k euros property, not interested in taking a mortgage. With my savings and borrowing from a friend as lower interest loan, would a purchase of 500k flat is considered okay from the German tax authorities' point of view? I'm British citizen, so majority of the funds came from the US, from the UK.
Not sure whether I missed something, but of course, the purchase for 500,000 is okay. That's probably much quite a normal purchase price in Berlin, at least. If you get the mortgage from a friend and you do pay interest, you should probably formalize that in some way so that you can use the interest as an expense, because otherwise it won't be taken into account and you will basically lose that possibility to get some tax-free income. But there will be probably more thorough and look more at the contract if it's not a bank to accept that.
Okay. Yeah. And will the flat tax rate, let's say it's 42%, because you mentioned it before, be used to calculate the tax benefits on the investment property? If not, I assume it would be progressive downwards. But how do you then calculate progressive downwards average? I see many people taking about 42%. Is it always flat?
Oh, I tried to decipher. I'm a little bit lost here. So 42 is not a flat tax. It's kind of the last step before what we call the wealth tax, of the end of the progressive tax rate, the normal progressive tax rate. And I think it's...
Should I read it again?
Yeah.
So I think the question is, okay, but how do you then calculate the progressive downwards average? Because you take the 42% for the investment property also to calculate the potential tax benefits.
No, I think it's a misunderstanding a little bit here. I think that should be in a one by one. Please feel free to contact us to double check. So when you buy a property, just to get that right? If you buy, let's say you buy a property for 300,000 euros, and please feel free to answer to that topic here in the chat. And let's say you have 3% return, which is sort of realistic in Berlin. It means you make 9,000 euros rental income. If you write off interests, depreciation on the value of the property, which Volker already said is around 5%, you have more to write off than your rental income. So basically there are no taxes to be paid. So there's nothing with 42%. So the question you just have put out is something, if you have a lot of rental income, assuming you're non-German tax resident, by the way, if you have a lot of German rental income, I don't know, 20,000 a month, 30,000 a month, then you actually, after depreciation, we will have enough taxes that you're going to hit the 42%. And that's a very rare situation where most of our clients, at least, are not in there yet. Sadly, would love to, but it's not everyone.
But if you are, then now is the time to act, because for you, that's also very interesting, because you could write off more with these now.
These are the people who are now saving 48% taxes. I'm sorry, Volker. No, I'm joking. So that you have more opportunities to save taxes.
Yeah.
If you then buy other properties like KfW, like energy sufficient buildings, which have certain certificates and are new builds, and etc., etc., etc. So that's a different topic, right? So please be aware of, you're not paying 42% income tax if you have one little apartment which you rent out in Germany, because there's simply no income that needs to be taxed, because you're not having enough profit.
Not even with a large one. Yeah.
Yes. I hope that's correct. I hope that's answered that question. Yeah.
I think so.
Okay.
Nobody replied. Another short question. Are expenses for furnishing the apartment tax deductible? And what about other expenses such as internet, electricity contract, and so on?
Internet, electricity contract, yes. Although usually apartments are in Berlin not rented out with electricity and internet, but they're rented out basically cold. And actually, without internet, the tenant contracts his own electricity and internet. Yeah, this is the standard. If you look at short-term rent, this is maybe a bit different. Furniture, if you furnish the apartment, yes, can be written off. How much can be written off depends a bit on the usual life expectancy of what you put in there. Yeah, I mean, there's and of course, if something breaks, then it can be replaced and you write off the rest, just like a normal business. But usually it's something between 5 and 10 years for most things.
And we have a reply regarding the 42% question.
Okay.
My question is misunderstood. If I'm negative net, so you have more expenses than
Yeah.
income, would I get back my money from the Finanzamt?
No, if that's the only tax, if it's the only tax you pay in Germany, no, you won't. Yeah, so it's not that if you have a negative income and you're limited taxable, so just with real estate and you have a negative income, they're not going to pay you something. Yeah, because you can only get tax back that you have paid.
But it's a great marketing question. Thank you for that. I would love it. I would love it. We don't need agents anymore if we have that, you know.
Paying 30K taxes. Just said.
Yeah, then he can get
Yes.
that back.
If you have
You can
just
balance it against the other income that he pays taxes
maybe
for.
just a quick understanding, because for everyone else in that chat who is not asking this question at the moment, big difference. If you're a German tax resident, yes, then you have a lot of advantages. If you own German property, you are more because we're talking about income tax here, right? It's not property tax, it's income tax, your income tax. And if you're not based in Germany as a tax resident, right? This is what we talked about. There's a different story because then we talk only about the rental income you have in Germany, not your income from other sources, right? So your question, if you have income in Germany plus a German property, then you're being considered as a German taxpayer. And then, of course, your question is correct.
Yeah.
Then you might have high taxes to be paid off. And then again, you should look at buying energy sufficient apartments where you can have even higher tax advantages.
But again, at that point, if you are unlimited, if you're paying 30,000 in tax already, and you're trying to reduce that with income from other sources or negative income from other sources, I really recommend you speak to someone individually about your situation, because there are limitations to how much you can balance it, and it would be a shame if you invest into the wrong product here.
Yeah, exactly. So speak to a lawyer and a tax expert before you buy. Yeah. So there are a couple of other questions people have sent us it in. Nick, is this okay when I go through the next question?
Yeah, you can move on.
Yeah. There's one question from German people who live not in Germany. They're looking to purchase properties in Germany. Do they have any advantage because they're German citizens or hold a German passport?
Might be a bit easier with the bank
Yeah.
for the mortgage, but legally there's no difference. No,
Okay.
they don't have an advantage. No disadvantage either.
Okay, I have a next question. Do I have to have a residence or minimum a postal address in Germany to buy or own property in Germany? No, you don't. Please correct me if I'm wrong.
I'm the one to answer the question.
Sorry,
you don't.
For tax reasons, asking. So she's just asking, he or she is just asking, for tax reasons, shall I register in Germany? Is there any advantages I'm registered in Germany for tax reasons?
Usually not. I mean, you have to look at your tax situation, but usually, I mean, yeah, no, sorry. It's really individual. You should look at your tax situation. It may be an advantage, but I think most of our clients, for them, it would not be.
I have the answer to your suspicious thought already in the next.
Germany is considered one of the higher tax countries.
Yes.
So it's unlikely it would
But we have
be an advantage.
Kindergeld. Here you go. That's the answer.
Kindergeld, you may have.
Is renting out the property beneficial for Germans who move out of the European Union to remain eligible for Kindergeld?
To have property.
Yes.
For
And
Kindergeld.
be resident, have a postal address in Germany to collect Kindergeld.
No, I don't think that's how it works. Honestly,
No.
I'm not an expert on Kindergeld, but I don't think that's sufficient to just have
But
an
it's a
address
funny
there.
question, I have to
I would
say.
think you would have to
Okay.
be registered and do a bit
Mm,
more. But honestly, I'm not really knowledgeable about that part.
no. Good. Again, speak in a one by one maybe with Volker and his team. So there is another question. I already own a property in Berlin with a mortgage, and there also there as I was a resident there at the moment, at that moment, I hope that's in the past, what tax benefits I can have now as a non-resident? And selling it, what tax benefits could I have as a non-resident?
Mm, well, I mean, the taxation of residents and non-residents are, I mean, when it comes to this, to real estate, are quite parallel. Yeah, they're quite the same. There's a bit of difference that you don't have tax-free minimum in Germany if you are not a resident, because the idea is that you get that in the country you're a resident. Um, but there's not a, I mean, you have the same benefits as a resident, meaning you can sell it after 10 years without having to pay taxes on the profit, for example. I think that's pretty much everything I can think of now.
Okay. Okay, I think we have that question already in the chat regarding internet and electricity. I am a German citizen living in Canada. Is there a special situation for me, or am I simply the same as any non-resident? I think we answered that question already from a different client.
Well, technically you are, but of course there are double taxation treaties, right, with different countries, and I don't know all the double taxation treaties, but they do differ a little bit. Yeah, for example, so when you tax in Germany on your rental income, you may still have to declare it in Canada, and Canada may exempt it completely from their taxes, or they may just deduct the taxes you paid. So it depends a little bit on the double taxation treaty, and that's you would have to look at the double taxation treaty with Germany and Canada. I'm sure there's one in place.
Yes, I think pretty in every.
For income, there's almost one for every country. Well, almost, yeah.
So are there any advantages for German tax residents when buying a second property?
Well, that's basically what we spoke before, that you can, if you have a high taxable income already from your first property, you are able to bring that down if you have a lower taxable income because of these additional depreciations. These are, as I said before, they're all just these special ones, the 6 times 5 or the additional 8%. This is additional 5%. This is something that is only for new builds. Yeah, so you will not be able to use it on the old property, but if you buy something now that is eligible for these, then you can bring down the tax burden for the old buildings as well.
Okay. So I think that's pretty much in terms of, there's one very special question which we're going to come now, but I just think in terms of the general questions, I think we have answered them already, because there's a lot of repetition, people are asking the same questions. I think being a resident in Germany, non being a resident, tax resident, not tax resident, registering at the property, not registering, owning several apartments. Everyone is asking about the 48%, of course. You know,
4 years.
I think
Yeah.
the lovely number. I hope you got that right? Please,
Yeah.
I think that's very important, that there are a lot of topics you need to be aware of tax-wise. I think that's very, very key. So we have another one, which is a more general one. Apart from the information, please explain a common example how it will work. For example, property costs, build year, taxable income. I think we haven't spoken about all the transfer costs yet, I think. Maybe that's your question when you buy property.
Yeah, so when you buy property, you usually have the purchase price, obviously, and then you have real estate purchase tax, 6%, for example, in Berlin, which is quite high, I think, compared to many other countries. You have notary and land register fees, about 1.5%, and then you may have a broker's fee, and all this together are the side costs, and all this is together being taken as the cost of acquisition, and then you calculate this. You distract basically the percentage for the plot, and then you have your depreciation. So this is the calculation goes. There's of course the numbers are very individual because it depends on your purchase price, obviously, and also some of these fees that I mentioned are also digressive. So it's not just saying 2%, 1%. So what I usually prefer to speak about the percentage of the yield and the percentage of the deductible expenses, and then you get an idea about the corridor where your most tax efficient income is.
Yeah, I think there's a very complicated question. I would like to go through that step by step. I think partly that person is already in the chat, and we answered a couple of his questions already, of her questions. What I think is also important, then property has a different tax rate than, for instance, the kitchen or the furniture. Maybe you want to...
Depreciation rate.
Depreciation rate. Maybe you can...
Yeah, because the depreciation is always like an abstract life expectancy. I mean, of course, for real estate, that is a calculation that is very taxpayer friendly. Yeah, because most properties, most real estate in Berlin is not gone after 50 years. It lasts 100. I mean, it's maybe true in countries where you have wooden buildings or something, possibly more. But I think in Germany, the life expectancy of buildings is probably more in the area of 100, 150 years. But the idea is to write it off over a certain period of time. And this, if you write it off over 50 years, then it means 100% divided by 52%. Yeah, so that's the concept behind. And now because Germany is in need of apartments, which I think also expresses in the quite steep rental increases in Berlin or in Germany in general, they are trying to support new apartment construction and new investments into apartments. And so that's why they changed this depreciation rate a bit away from the pure calculation of how long will it last, because the building doesn't last any shorter now, to make it more attractive. But that's a pure political decision.
Exactly. So that's a pure political one. And what I think is also important for you guys is that if you already own an apartment or a multifamily house, you also can ask certain surveyors who can give you the so-called Restnutzungsdauer. So that's a German word. So please correct me if I'm wrong. So that's the time the property is going to last, assuming you have to invest into the piece of real estate. Like we have that energy topic going on. We have a lot of other things going on.
For writing off these additional investments.
Yes, because there is that carbon footprint situation in Germany until the year 2045. Everything, the heating has to be carbon footprint neutral. And so there are certain investments that need to be done, and you can deduct them. It also helps you. Yeah. But you need a surveyor for it. It's not just Volker and Achim giving you a number. You need a surveyor, and then Volker can use that when he does a tax return with his team to give you a better depreciation. Am I correct there?
Yeah, but I think usually people are buying here apartments. Yeah. So it's a topic of the house usually, not so much of the individual buyer, because I think most people would be really challenged to do that by themselves. So usually we can sort that out quite well with the building administration, because it usually affects not only one person in the building, not one owner only.
Yeah. So again, I just want to let you know, there's a lot of stuff Volker and his team can do for you when it comes to saving taxes, doing the proper tax return, avoiding you for funny letters from taxmen who don't remember them maybe. And if they contact you, please always make sure you have a good lawyer in your hand, in your corner of the ring. That's quite important. Nick, is there anything missing here from the chat? It went quiet.
Just regarding the question regarding the 4%.
Yeah.
There's just things, a bit of misunderstanding. I understand that QNG 40 energy efficiency building will get additional 4% depreciation. Are the energy requirements the same for degressive depreciation? And he explains, a tax consultant told me for degressive depreciation there are no special energy requirements. Very confusing, as different tax consultants saying different things.
Well, there are two different things. There is the 4 times 5, yeah, which is depending on when the building was when the building was built and has a certain end time. Sorry, 6 times 5. No, I'm getting my numbers, mixing my numbers up too. So there's 6 times 5, which is depending on when the building was started to build. And then there is the additional 5% for a period of 4 years, yeah, which is the year of the purchase and then afterwards. And that is depending on KfW 40. Yeah, this is clearly funding. I mean, I know it's confusing and complicated. I would prefer different, but actually that's true for most of the tax things in Germany. They're quite complicated, and that's why they're only to a certain extent we can really answer these individual questions here, because you usually have to really thoroughly look at the whole picture for an individual case to really calculate it.
And another one. Hello, I own some apartments in Berlin. If I renovate one unit, can I deduct all the renovation expenses? If yes, with a fixed percentage or not?
You can deduct, in general, yes, you can deduct renovation expenses, but as Achim said before, you may have to write them off. Yeah, it depends a little bit what it is. If you just paint it, then it's a different period than if you build in a new heating, because a new heating has a much longer life expectancy. Yeah, so it really depends a little bit what you're doing, but yeah, generally all your expenses into the property, you can you can deduct them, not maybe just in 1 year. You maybe have to split that onto several years.
Okay.
Perfect. There's my favorite question at the end.
Yeah.
We discussed that. Difference between Sollzins and Effektivzins, Volker. So for all you guys who don't speak German, the Sollzins is the interest, how do you call that? The interest that should be, and Effektivzins is the interest that is.
Effectively is, yeah.
Yes.
I mean, Sollzins is what they usually write as the official interest rate, and then there's the effective interest, which includes all the costs, yeah?
Yeah.
I'm not going to say what I said before, so don't expect.
We made a couple of jokes about that question, sorry.
Yeah, it's basically the difference between what you should do and what you do. So that it's like, yeah, this is the difference. It's the interest between what the interest should be and what the interest actually is.
Yes.
So it's not too far apart, but usually
There might be some difference.
The actual one is a bit higher than usually.
So the Effektivzins is the one you need to watch out for, right?
Yeah, exactly.
That's very important. And it always tells you in your mortgage contract. Yeah. So the bank always has to disclose the real interest.
There's a EU form.
Yeah.
Every mortgage contract that has all these numbers on there, and it's worth looking at that one.
Volker, did I miss to ask you something? Anything?
No, I think we've perfectly confused everybody with these tax things. So
we confuse everyone. That's why you have to get a lawyer, right? There you go.
Yeah. If you have a question, I mean, the whole working out the best tax situation is part of what we do in this 360 approach. And if you have a question on that, please feel free to ask me.
Yeah. So it's very important that before you make a decision to buy, to sell, or maybe to give it to your siblings, your families, just always speak to someone regarding taxes, because there might be huge differences whatever you do. That's another topic. We haven't discussed that today. Maybe just to put that again into motion here. Please feel free to contact us. I mean, how can they reach you, Volker?
As you said, vpmk.de, you have the website, and there's my contact and my email address, or if you remember my last name, Mauch @vpmk.de, you can contact me there, or just call Achim and ask him for my number.
Yes, keep my private phone number here out of the web. Thank you for that, Volker. No, we help you, and great for having you here tonight. It's a 54 Berlin real estate. By the way, the next one is in German, and we're talking about rental situation, claiming self-usage, what you need to be aware of as a landlord, as a buyer, as an investor, and also what you need to know as a tenant, what is important in Germany in tenanted apartments. Volker, first of all, great. Thank you for being here today.
It was a pleasure. Thank you very much for having me.
Hopefully you come back after I asked you some very difficult questions.
If the German government continues popping out these quite a little bit complicated changes, I'm sure I'll be back.
There you go, and I'm very sure they're going to do that in the future.
All right.
Thank you, guys. Thank
Super.
you.
Thank you.